Hey everyone, welcome back to Corporate Decoder, the place where we pull back the curtain on the corporate world to see what is really going on behind the scenes. Today we are diving into a report from a giant in the tech world, Intel Corporation. And believe me, this is not just any old report, it is packed with some juicy details about a significant deal. Before we dig in, if you like getting the unfiltered truth about how companies operate and what their financial maneuvers actually mean, make sure you are subscribed. And hey, we have a fantastic Discord community linked in the description below where we break down these filings even further, so come hang out with us there. So what is this all about? Well, on the 26th of September of 2025, Intel closed a deal where they sold a massive chunk of their own stock, about 87 million shares to be exact. That sounds a bit strange, right, selling your own shares, but not so fast. This was part of a specific arrangement. This big sale was to a company called SoftBank, and it was for a cool $2 billion. Now, why would Intel sell its own stock? Well, this wasn't a distress sale or anything like that. The filing tells us this was all planned out in a securities purchase agreement signed back on the 28th of August. And importantly, they are saying this was a private placement, meaning it was offered to the general public. This is important because it means they are relying on an exemption from public offering rules. Think of it like this: Intel needed a big cash injection and SoftBank was willing to provide it in exchange for a significant stake in Intel. This $2 billion cash influx is a pretty substantial amount of money for any company, and for Intel it likely gives them a lot of flexibility for future investments or to shore up their finances for upcoming projects. This agreement, the securities purchase agreement, is the rulebook for this whole transaction. It outlines exactly how many shares are being sold, what the price is, and under what conditions. By referencing it, the filing tells us this was a formal and legally binding deal, not some loose handshake agreement. They also mentioned that this was initially disclosed in another filing back in August, which means this wasn't a surprise move, but rather a development that the company had previously signaled to the market. Now, this part about Section C, A of the Securities Act of 1995 refers to a specific legal exemption. Basically, it allows companies to sell securities directly to a limited number of sophisticated investors without having to go through the lengthy and expensive process of registering the offering with the government. That means they claim it was a private transaction not involving a public offering. This is a common way for large companies with established relationships to raise capital quickly. Looking at Intel itself, it is a company that has been around for decades, a real titan in the semiconductor industry. They design and manufacture processors, the brains of computers, and a whole lot more. They've faced stiff competition in recent years and have been investing heavily to try and regain their leading edge in chip manufacturing technology. So this infusion of cash could very well be directed towards those huge capital expenditures needed for advanced manufacturing facilities. The shares being sold are Intel's common stock. Par value is a nominal amount assigned to a share of stock that has no relation to its market value. The key here is that it is common stock, which means these buyers are getting ownership in Intel. Intel's stock trades on the Nasdaq Global Select Market. This is one of the main stock exchanges where investors buy and sell shares of publicly traded companies. When you hear about the stock price of a company like Intel, this is where those prices are determined by supply and demand. And like with any official filing, there is a signature. Here we see April Miller-Boyce, the Executive Vice President and Chief Legal Officer, signing off on this report. This signifies that the company's legal team has reviewed and approved the information being presented to the public. Now let's step back and think about what this all means. Intel is raising $2 billion through a private placement to SoftBank. This is a strategic move likely aimed at strengthening their financial position to fund their ambitious plans in the incredibly competitive chip market. They need massive amounts of money to build and upgrade their factories and develop next-generation technologies. This deal provides a significant portion of that funding without diluting their public shareholder base too much by issuing shares in a broad public offering. The risk here is that the performance of Intel's future investments will determine if this was a wise use of capital. If their new chip technologies succeed, this cash could be a game changer. If they falter, then $2 billion less in their coffers will certainly sting. It also signals a strong belief from SoftBank in Intel's future prospects, which can be a positive signal for other investors. We will be watching closely to see how these funds are deployed and what impact they have on Intel's market position. Alright, that is our deep dive into Intel's latest filing. What is your take on this massive cash infusion? Are you bullish or bearish on Intel's future? Let us know in the comments below. If you found this breakdown valuable, please hit that like button. It really helps us out, and subscribe for more corporate decoder insights. And don't forget to join our Discord community linked in the description. Thanks for watching, see you next time.